Hey, this is Crystal Miller with another Tip Tuesday for you. Today I wanted to tell you about some really great updates that Fannie Mae is coming out with. Fannie Mae is a huge backer in the mortgage industry, and they set the tone for guidelines across the board. So they have a pretty huge influence on the mortgage industry as a whole. And one of the things that they're doing is they're finally going to be accommodating some student loan hurdles that we have had that are growing over the last decade. So student loans are becoming obviously more and more common. And currently, what we do is we'll take your total student loan debt and we put a percentage of that into your liabilities. Now, your liabilities are the things that often report on your credit report. It's your financial obligations, car payments, credit cards, those kinds of things. So basically, we are taking a percentage of your total debt to student loans and putting that in there as if it was a car payment. So where that becomes a problem is that if you've already got your loan into an income-based repayment plan, or if your parents are maybe making the payment for you, or they're in deferment, something like that, it's not true to your scenario. So that was creating some pretty large hurdles for people who were actually making payments on their student loans, but it was a significantly smaller amount than what we were putting into their liabilities list. So Fannie Mae has acknowledged that as a true issue as to why there weren't more home ownership happening in amongst the generation and the age groups of people that are just getting out of school. So they've made some really awesome improvements, and they're going to in effect this summer in July. So starting in July, a couple of the really great things that you can do now is you can do a cash out refinance to consolidate student loan debt, and hopefully you can make your student loan debt payments smaller as well as capture a better interest rate for your home. The other thing that they're going to start letting us do is we're going to be able to acknowledge that income-based payment amount. So we're not going to be overriding that with the percentage amount anymore. We're going to be able to really hold that into your liabilities list, which is great. That's going to give you more spending power towards your house rather than making you maybe settle for a price range that isn't true to your scenario. If you could afford a little bit more previously and you want to now, I think we'll be able to accommodate that desire a little bit better than what we could previously. They're also going to start acknowledging payments being made by other people. So if you've got student loan debts and your parents are making that payment for you, then we're going to be able to acknowledge that, and we were not able to do that in the past. So these are three things that Fannie Mae is taking some pretty drastic measures in helping people get into home ownership easier outside of college. So hopefully this is helpful information. And if you have been discouraged by your debt to income, if you've talked to a lender and had some of those hurdles previously, now is definitely the time to get back in and have some of those conversations again, because this is going to make a pretty drastic impact and improvement on what you're going to be able to do. So hopefully this is helpful. Thanks for watching, and I will see you next week.